Good morning, everyone, and thank you for attending the OmniVue's 2014 Year-End Close Seminar for Dynamics NAV. We really appreciate your time and hope we find this session very valuable. We always appreciate your feedback, and of course, if you can think of any additional seminars or areas of interest, please feel free to shoot those over to us, and we'll be happy to produce further sessions. My name is Sean Nichols, and I'm a Client Success Manager here at OmniVue. Also, please note that we are recording this session so you can access it at any time in the future. First, a couple of brief announcements. As you may have already seen through email, OmniVue does have a current promotion, so should you need additional NAV licenses of 3 or more, you can save 15% through December 19th. Also, if you haven't been aware already, NAV 2015 has been released. We have some early information on the new solution. If you have any questions or want to learn more about the additional functionality, we can certainly address those questions at a later time. Now, please allow me to introduce today's presenter, Michelle Warren. Michelle is a Dynamics NAV Senior NAV Specialist and is a member of the OmniVue Client Support Team. She has an MBA in International Finance and several years of experience within the NAV environment in client care solutions, development, support, and of course year-end closing. We're very proud to have her with us today. So with that, please allow me to turn the presentation over to Michelle.
Hello everyone. We're going to take a Microsoft Dynamics NAV year-end tour. We are going to explore the required setup controls, user permissions, periodic activities, and these activities can include your vendor 1099 forms and any tax authority reportings required. Then finally, the financial closing process routine. Where do we find this? We find this in our modules of General Ledger, our subledgers of accounts payable, accounts receivable, and inventory. Our module for inventory, we will do our physical inventory counts, our physical inventory adjustments, or any revalue of inventory. We will do our standard periodic journals. We will look at our cash management and our bank reconciliation. And then, should you have any questions, at the end of this presentation, we will have contact information available for you to submit those questions to. So let's get started. We're going to start in the vision by going to our fiscal periods. I will use a search tool on the top, and we will go ahead and put in our general ledger setup. In our general ledger setup, we have fast tabs. These fast tabs, we go ahead and put in our post to and post from dates. This is a global restriction on all users within the system. From here, we'll put in the first day of the new period or the new fiscal year to the last day of the first period in the new fiscal year. From here, we then want to go ahead and make sure that we have our accounting periods set up. In the periodic activities, we have fiscal years and we have accounting periods. These accounting periods need to be a two-step process. One, we will create the new accounting period for the new fiscal year, but then what we want to do is we want to close the prior year's financial fiscal year. We do not want a date lock at this point in time. When we date lock a fiscal accounting period year, a fiscal year, then we do not have ability to post any adjusting entries after or during audit preparations back to the accounting period for prior year. There is a secondary accounting period which we call an inventory period. An inventory period is that which is to define a period of time in which you can post changes to your inventory to companies who use the inventory module who have item controls. Not a recommendation For companies who are financial, they do not have to use this inventory period control. The next piece of the puzzle is we need to add back in a user or a couple users in the financial team so that they can do any type of adjustments back into the system. So now we're going to go ahead to our departments, and we're going to go into administration. And from here, we're going to go into our application setup for users. And this user setup control is going to be able to control for a specific or what we call a named user to be able to post back into a prior period. In the example that I show you, in the edit list, you can see that the user, Michelle Warren, has the ability to post on 12/31/2014 through January 31 of the new year, 2015. So now that we have our user set up so that we have someone who can do an adjustment back to a prior period, and we have all of our other users set up to commence doing their daily activities, Finance now has their obligation to go in and look at the subledger activity. Dynamics NAV is a subledger-driven accounting system. That means that we post to our customers, and our posting groups post that back to our general ledger. In this case, let's go ahead and start with our financial management and our receivables. From the receivable side, the first thing we always want to do is we want to run an aged accounts receivable report. This aged accounts receivable report, I'm going to age as of the 12/31/2014, and I'm going to do it now based on my transaction dates. From those transaction dates, I'm going to go ahead and preview this report. When I preview this report or I print this report to hard copy, I'm going to look at anything where my accounts receivable or customers have balances which are remaining. Those remaining dollars that I have in the system or on the report, I may have payments and I need to make sure my applications go back to my invoices to cleanse or clean my accounts receivable, aged accounts receivable report. Then what I want to do is I want to go into my payables and I want to run that same routine. I want to be able to run an aged accounts payable report, and again, this time it's not from the due date, it's from my transaction date. I want to then go ahead and run and apply any payments or credit memos back to the physical invoices. Once I have cleansed my aged accounts receivable and aged accounts payable report, I then want to go in and I want to run for a reconciliation customer and vendor account. So I'm going to go in my search and type in the word reconciliation for customer and vendor accounts. When I run for this customer and vendor accounts, of course, I'm going to add a date filter in here that would be T for today or 12/31/2014, in which I'm running for, and I go ahead and print this. What this does is it has the ability for you to see what is outstanding in your vendor and your customer that may have impacted the general ledger but not impacted your subledger routines. So now your two general ledger and your accounts receivable customers or accounts payable vendors are out of balance. Before you can close for the year, you want to make sure that we've made any adjusting or correcting entries. Adjusting and correcting entries, in this case, for payables, would be in our purchases journal. In our purchases journal, we're going to make sure that when we're adjusting for anything that's impacted our general ledger, our account type is going to be equal to GL account. In our offset for this GL account number, whatever, I'm going to grab an account number, our ledger account offset is going to go into what we call a vendor. That means I'm bringing it down to my subledger. I'm removing it from the general ledger and placing it into my subledger for vendor. You will do the same thing when we're doing accounts receivable. When in your accounts receivable, this time we're going to be using what we call the sales journal. The sales journal account type would be that of equal to customer, and the offset would be into the general ledger, removing from the general ledger and adding into subledger activity of customer. Once we have done our adjustments and our applications back to our subledger accounting activities in our payables and into our receivables, we will then want to do a reconciliation of AP to general ledger. And we can go into payables, reports, into our GL, reconcile AP to general ledger. From the reconcile AP to general ledger, again you can validate anything where it has hit the general ledger but not your subledger activity accounting. Division is a many-to-one relationship. There's many ways to reconcile. There's many ways to run reports in Division. I'm just showing you the best practices, the canned, already created reports available to you in the Dynamics NAV packages. Once we have done subledger reconciliations, we want to run what's called a 1099 processing. That 1099 processing is going to be for our contract workers, where they're required to have a 1099 to do their income statement, their income taxes. Forms can be purchased from any local Office Depots, Staples, office supply store, and Division directly prints to those specific forms. So in this case, I can go ahead to my search engine again, and I'm going to type in the word 1099. In our vendor 1099, you will notice that we can produce them in different segments. We can produce them in miscellaneous, in dividend, in interest. In this case, I'm going to be doing them in our miscellaneous. We'll do for the calendar year 2015. When we run for 2015 and we say we want to run for a test report, you can do it where you can filter control on just one specific or all the specifics. Now, if we run for a 1099 and we run for all our contract workers and we don't use a filter control, Division knows that I'm only running for 1099 from MISC, miscellaneous, which has been identified on the vendor records. When I do this, I can go ahead and preview, or I can do a print control of those specific reports. And you'll see the layout that has come into play. From this report, you can also identify by going back to your vendor and going back into a physical vendor card itself that is a contractor, and identifying on the ledger activity that all the numbers have come into your 1099 form. If they have not come into the 1099 form, you can adjust and make any changes directly to the ledger entry that needs to have a 1099 and then do a reprint for 1099 form reporting. There are more details for changes in your 1099 located in your NAV help, or you can go ahead and reach out to us at OmniVue and we can help assist you with that in our support division. Let's move on now. We're going to go ahead and work into our inventory. And from our inventory, as we know in any month-end processing, that we have to run for our inventory valuation. Once inventory starts cycling again and we move into the next accounting period, we know that we cannot run an inventory valuation. So it's critical time sensitive that we run our inventory valuation report at the time of the closing of that day. So 12/31 rolls around, we want to make sure that we are running for our inventory valuation report on 12/31. So we'll type in the 12/31, and we go ahead and run for the full inventory. Once we run for this full inventory, we then can look back and say, now we must run for a task called adjust cost item entries. We will run our adjust cost item entries so that we roll up any type of costing into the standard costing within the vision. Then, again, you'll repeat the same routine and do an inventory valuation again so that you have a report of a before you did your inventory adjustments to when you did your adjusting costing entries into your inventory to when you have your inventory valuation report. So you have something to look back at. And you can run these to file and save them, and you can run them to Excel and save them in the Dynamics NAV 2013 R2 platform. So once all of that is completed, we believe that we've come to the period end for 12/31. But now we need to move into what we call the year-end process for inventory. And how do we do that? We're going to now navigate into our warehouse and into inventory. And you will notice that at the end of a year, commonly, not always, do companies have physical inventory counting period where they conduct a cycle, a zone, or a full inventory count. When those are brought in, you adjust for them, you post it down, and now you have done that through your physical inventory item journal. We can go ahead then and run for evaluation of inventory again and make sure everything is there. Everything's accounted for. And then what we can do is we can come back and go into our inventory accounting periods under periodic activities under the fiscal year. And this time, in the accounting periods, we're going to go and close the physical inventory period. And again, this is all available in your inventory period on your ribbon control. And you can see that there's an activity for processing to close a physical period. Again, this is only if you're an inventory controlled business, not a financial business. Next piece of the puzzle is that we have closed our inventory, but we haven't locked it. We've closed our accounting period, but we haven't locked our accounting. However, now we must go back in and manage our purchase order or manage what has been receipted into inventory but has not been invoiced. We need to evaluate inside of our purchases, our order processing and our purchase orders, the ability to look at anything where our status is equal to released, because that means that these have been looked at and something has happened to it. Either we sent it to our vendor and we're waiting for it to come in to be receipted, or it's already at the vendor, it's been at the shipping dock, it's been receipted in, but we haven't invoiced for it. So we will need to manage and review our purchase orders that are in our list for status equal to released. From here, if possible, we want to go ahead and push our purchase orders to a invoiced status and it's been removed from our purchase order list. Or we take what's on the purchase order list and we say it's been receipted and now we need to accrue and we need to make a periodic reversing entry that will say we book it in 12 of 2014, but we reverse it on January 1 of 2015. Those are standard reversing entries. Once we've concluded with the accounts payable side of the house, we need to go back and look at our receivable side of the house. So let's go ahead and jump into sales and marketing, order processing, and look at our sales orders. Again, our sales orders, we may have to do a little advanced filter control on this and look at what their status controls are. And in this case, we would use released again. And when we say that they've been released, we've either moved them into the physical warehouse to be shipped, or it has been through the warehouse, it has been shipped, but it has not been invoiced for. So we need to make sure that we push and do a sales order management so that we have all that we can invoice for 12/31 completed prior to moving into January 1st. Any purchase order, any sales order impacts our inventory. So if we do our sales orders in our purchase order management in parallel to our inventory physical counts, we will impact the numbers that come up on the physical inventory count sheets. So we want to make sure that we're managing, or our team is managing, sales orders that have been shipped, not invoiced, and our purchase orders that are sitting out there and need to be receipted into inventory and invoiced to our vendor. As we move forward, behind the scenes, finance has been doing their work, and finance has been in cash management. In cash management, we have bank account reconciliation. Those bank account reconciliations can be one or many and can be done manually, or in the NAV 2013 R2 platform, we have a bank account reconciliation framework package, where now when we create our framework package and we create a new bank reconciliation, we have the ability to import the data information. We have an entire session at OmniVue on our new framework for bank reconciliation. Please join us in our next webinar for that. Once a bank reconciliation has been posted to the general ledger, and the adjustments have been posted to the general ledger, we're now ready to move into running our financial statements. Our financial statements are considered account schedules. Our account schedules in many companies can mean many different things, from doing analysis to doing our standard balance sheet to our P&Ls to running cash flows, even running any type of asset testing, any type of analysis by dimension inside of an already existing financial statement as an income statement or a balance sheet. And then we also have the ability to run just analysis by dimension off of the general ledger, or analysis by dimension off of our sub-ledger accounting, meaning I want to see my analysis for sales, my analysis for vendors. That's the scorecard information off of our sub-ledger accounting activity, which should and will balance back to our general ledger since we did the accounts payable to GL reconciliation and we did our customer and vendor reconciliations. Now that we feel solid about our financial activity and our sub-ledger activity, we're going to go ahead on the finance team and run for a periodic activity called closing income statement. This task will close off the income statement expense accounts into what we call the retained earnings account on the balance sheet. A feature to remember: the retained earnings account is going to accept all expenses at a summary level. It will not break it down by GL account by dimension combination control. Again, OmniVue is available to review that with you, and that would be considered a modification to your system to allow for it to roll up and be able to go to GL account by dimension combination control. Once we run the closing income statement routine, when we go back to run for our account schedules in the general ledger, you will now see on the income statement, when I run for my income statement, the ability to see $0 in my income statement. When I run my income statement and audit comes in January, February, March, and says there must be an adjustment made to the general ledger, the user setup in which we set up earlier, who could post back to the prior accounting period, will book that entry into a general journal, into a batch control for adjustment. Once that's completed and posted, a routine by finance will have to commence again the periodic activities for the fiscal year to do the closing income statement routine again to make all income expense accounts go back to zero. Now I'm ready to say my accounting periods are going to be locked. Now I will enter back into my accounting periods and I will close my year. When I close my year, I've already commenced that this is a closed year, but now I want to date lock it. This is an absolute. There's no turning back. When I go ahead and I say yes to lock my accounting period, even though I have set a user to adjust back into the prior year, that user will no longer be able to post anything into the prior year. When I date lock and I have closed off my inventory period, I have date locked and closed my inventory period, and I will not be able to adjust inventory or adjust cost my inventory back into prior year. Here ends our live webinar. I thank you for joining us today, and I do hope these tips help you ease your year-end closing.